Folks, putting $90 into this one stock can change your life. In today's video, we've got a lot to discuss. Number one, the latest on the market data. Number two, the latest on plays. Number three, the main entree, one stock that is screaming buy right now, so much so that just $90 into this one stock using a specific strategy can change your life. And then finally, we've got dessert. One high conviction specific stock of ours that is absolutely skyrocketing, but that many folks are missing the bigger picture on. We are going to get right into it, and I'm going to put all the timestamps down below. But first, as always, if you're the one taking the ultimate risk, you've got to be the one doing the ultimate frisk. Always do your own due diligence on all ideas presented. By the way, if you'd like to get all of our Discord alerts, make sure to sign up for that with the first link down below. We'd love to have you on the team. Okay, let's go ahead and get started with the market. So Bloomberg reports that greed surged to the highest since March 2024 after S&P 500 sees record. Quote, volatility-controlled products have been amping up exposure, with one Nomura Securities International measure showing projections for the biggest buying spree since at least 2004. Quants chasing trends across assets have also bolstered their long exposure to stocks after turning short for a few weeks, according to Barclays. Now, Charlie, what's going on here? Well, in April, during the tariff crash, high-volume hedge fund traders sold out of many of their long positions and used endless billions upon billions of dollars to bet against markets due to the tariff uncertainty. And as markets rebounded, well, many of these funds weren't fast enough to change strategy. And so many were left with huge unrealized losses as we return to a roaring bull market, right? So here we are now starting July, starting Q3, and many of these funds are stuck playing catch up with their clients' accounts, many of which are sitting on big losses. And in order to play catch up, well, they can't just play it safe. No. Think about this. If it's January 2026 and clients are going and they're analyzing their portfolio from this big hedge fund that they pay huge amounts of percentage fees on, and they're looking at the hedge fund and the hedge fund completely got destroyed by the basic S&P 500, well, guess what? There's going to be redemptions everywhere. So many funds that are late to the game are currently making the judgment call that it's better to buy in high than to risk being overly defensive as the momentum continues to roar in. Take a look at this chart from FundStrat. It shows how this year's market compares to other first year of presidency markets, as well as all years since 1928. While the beginning 6 months or so all look very different, the truth is that they all are now converging together for a similar end result. Now, another chart from FundStrat shows that if you look at the best month in the first year of a presidency, well, the median return is the highest in July. And in terms of win ratio, July is green about 67% of the time. Now, at the same time, there are some headline risks that you got to be aware of. For starters, the Fed is saying they aren't cutting rates for longer because of tariffs, and they expect inflation to pick up this summer. So trade negotiations can always break again whenever Trump decides to re-escalate rhetoric or stoke some more flames from that front. So as always, you got to balance your perspective here and always plan for all scenarios. Okay, let's talk about plays. So first, BBAI. Now, we alerted BBAI calls in the Discord over the weekend, and they opened yesterday at $1.38, and they ran to $2.35 at highs as of yesterday. Very nice rally, and for any folks who locked in profits, congratulations. But the reason we went and alerted $8 strike calls expiring January 16th, 2026 is because I wanted to give this BBAI play a longer time horizon to play out. BBAI is in the middle of a contract-driven momentum cycle, and days like today, where markets are going more risk-off, can lead to fairly unpredictable sell-offs. And since you can't time those, you got to look bigger picture. Now, as these calls dip, you might be asking, is it time for a rebound play to a newer high? Well, I continue to look for another climb and a bounce past that previous $2.35 high and into the high 2s and low 3s and beyond in the coming weeks. Okay, let's talk AMD. So back on June 16th, we alerted $140 strike calls on AMD with an expiration date of August 15th. After we alerted those, they opened at $4.74 and ran to $15.10, a more than 3x in a very short amount of time. Now, one thing you got to keep in mind when you're trading options is it's not like trading shares. You cannot just buy and hold them and expect to do well. You have to be willing and able to say, okay, I'm going to take profits during the take profit periods, and I'm going to buy the dip during the deepest consolidation periods. If something just broke into a new higher high, it's time to take some profits every 10 to 20%. It rolls. And then on the downside, every 15% is a period of time where your stop loss either activates or you're simply locking in some profits. And likewise, AMD is now in a sell-off zone. So for folks looking to play the next upswing in AMD, well, there's the opportunity to play those same exact 140 strike calls at a farther out expiration date, which in effect means that after this AMD dump we saw today, we can position to capture another wave to the upside. Next, APLD. So we correctly called the beautiful run from the lower trend line all the way through the channel to the big break into the $15 region. But since then, APLD has been consolidating, and now we are hanging out at the top quarter of the channel. Now, what does this need to do to get a quick pickup and break back out of that channel, Charlie? Well, you need more contract wins, you need some positive PR of really any kind, and you need a risk on surge. Without those, more practically, you simply just need more time. Breathing is normal. Don't be surprised if we get into a lower quadrant within the channel before the next surge. I'm not the type of person that can sit here and say, oh, this is going to go up Tuesday or Wednesday or Thursday. I'm the type of person that's looking at a high conviction play, looking at the trends, looking at where it's trading and what has historically caused it to go up. And then I'm saying, okay, well, the odds are that this is going to do well in the next couple of months. Okay, next, main entree. So UNH, United Healthcare, in my opinion, is one of the most obvious buys right now. Back on June 26th, not that long ago, we alerted the latest round of UNH calls, $350 strike call options expiring January 16th, 2026. They opened that day at $21.34, and as of today, they've hit new cycle highs at $31.20, nearly a 50% increase in a few trading days. Now, folks, what you got to understand with the stock is there's a lot of bearish articles coming out from short sellers that want to make sure that people are selling this stock. They're fear-mongering that this company has a lot of regulatory hurdles coming their way, and the government is going to come in and destroy it. Problem with that? Well, if you look at congressional filings, well, the leaders within government on both the Democrat side and the Republican side, well, a lot of them are buying the dip right now. Do you expect us to believe that politicians are going to destroy a company that donates tons of money to their political campaigns and that they're invested in? Ha ha ha. And unsurprisingly, there's close to zero real political will to change the way the industry operates. So that said, UNH, in my view, continues to scream buy at these prices. One of the only deep value discounts in today's market that is at all-time highs. 5 reasons to consider buying UNH. Number 1, they basically run the show in healthcare. UNH isn't just big, they're absolutely huge. They're the top dog in health insurance, and they also own Optum, which is quietly taking over everything from pharmacy benefits to running clinics. If you're betting on healthcare, you're betting on them. Optum is a money printing machine. While everyone watches the insurance biz, Optum is the secret sauce. It's growing fast, it's high margin, and it's diving into hot sectors like urgent care, data, and mental health. It's not just an add-on, it's an absolute growth engine. UNH also crushes it financially. UNH pumps out profits like clockwork. Earnings per share always climbing. Cash flow rock solid. They raise the dividend every year and buy back stock like it's on sale. This is the kind of financial discipline that a lot of investors dream of. This company is also very safe when the economy is a mess. People don't stop going to the doctor. They don't cancel their health insurance just because there's a recession. UNH's business is super steady even in downturns. And when the rest of the market gets rocky, this is one of those names that tends to hold very, very strong. And bigger picture, there's also the retirement wave. A lot of people get this wrong when it comes to UNH. Their Medicare Advantage plans are exploding in popularity as more and more baby boomers hit retirement. And that tailwind isn't stopping anytime soon. So in my opinion, the stock, very, very good buy right now. Okay, now it's time for the dessert. We need to talk about Hood. So a lot of folks don't fully understand what's going on with this stock. The stock keeps breaking out to newer and newer higher highs, and a lot of people are dismissing it as hype. And yes, these things eventually always breathe, but you got to understand what's going on here. Vlad Tenev, the CEO, the founder, has been very, very visionary, and he's continuing to execute on a very ambitious trajectory for Robinhood. Now, the context here is if you look at Robinhood, we've been calling out the value prop here for a couple of years now. For example, March 17th, 2024, it was trading at around $18, and we explained how it was screaming buy due to its crazy business growth, proven proof of concept, and increasing user base. And it repeatedly made it to our top stock videos in coming quarters due to it continuously figuring out new ways to monetize their member base. And we alerted Hood calls after Trump won, and those did very, very well too. And then we alerted another round of calls earlier this year, and those did well as well. Hood stock has been featured in countless ZipTrader videos over the last couple of years, and it's also a Discord portfolio pick. And so strong shout out to folks who played this correctly and have benefited from the move. This is another testament to why actually digging into companies, looking at the trends is such an important skill to have. And we teach you how to do that, by the way, in our lesson library. That's a part of Discord, first link down below. But what's actually going on with Hood? Let's keep this super simple. How does Hood make money? Well, trade revenue is 60 to 70% of revenue based on the quarter, and Robinhood receives a spread when users buy and sell assets on their app. Think stocks, options, crypto, you're buying, holding, you're selling, while Robinhood's earning a little bit of money on every single transaction. Net interest income is about 20 to 30% of revenue, includes interest earned on margin loans to customers, interest on uninvested cash balances, and from their Robinhood credit card. You have securities lending. Robinhood earns tons of money by lending users securities to other firms like hedge funds. This has been a practice that some people have criticized a lot, but nonetheless, it has been a way for them to print some money. And then there's other things like monthly subscription fees, interchange fees on its credit card, and media ad income from Robinhood's news site, so on and so forth. But if you're looking at this overall, you can see that the big revenue driver is the trade revenue. And the second heavy hitter is net interest income. So Robinhood, knowing this, is doing everything in its power to figure out how to bring as many customers onto their platform, to offer as many tradable assets as possible, and to make sure users are excited by their platform so that they continue to trade as much as possible. Basically, Robinhood's model thrives when trading activity increases, platform assets rise, customer cash balances grow, and more users sign up and engage. In the earnings reports over many, many years, you could see that Robinhood has been consistently delivering on this. But what is really, really exciting right now is that Robinhood has figured out how to offer tradable tokens that have the potential to long-term bring a lot more revenue and trading into the Robinhood platform. Robinhood has long built a reputation and got users to join them because of their innovative features. They changed the industry with commission-free trading, instant deposits, fractional shares, easy, fast crypto trading, cash management accounts that allow up to 2.5 million in FDIC insurance, and leading high interest rates on uninvested cash. But now they're getting on a bigger role with this. As of recent, they launched overnight trading, in-app futures trading, door-to-door cash delivery, instant boost on crypto deposits, crypto staking, stock and ETF tokenization for EU members. It also offers special rates on mortgages. All of these new and/or super competitive products are going to bring more and more users to Robinhood, which will result in more and more revenue for Robinhood. To me, I think they're about to tap into something way bigger than all of this. And that is the opportunity with private equity tokenization. For pretty much all of history, private equity has been locked away from retail. But yesterday, Robinhood's CEO presented a case scenario where that might not be the case for much longer. Traditionally, investing in companies like OpenAI, SpaceX, Stripe, or Databricks has been reserved for venture capitalists, hedge funds, accredited investors, institutional investors. The average investor never gets access to some of the best deals and most exciting high-growth companies in the world. Average investors have to wait until IPO, at which point, private equity investors had already gone in at like 1/10 the price. But Robinhood is now attempting to crack open the gates to a $10 trillion asset class by offering tokenized private equity. Now they're starting this rollout in the EU, but the CEO has said, hey, we're looking to do this in the US. And as it shows proof of concept in Europe, well, that's going to be the next stage for them here in the United States. And this is going to change everything. People, instead of just speculating on the stock market, are going to start going into the private equity space as well. And everyday investors are going to be able to invest in these exciting companies. But the most important thing for Robinhood is there's going to be an even bigger spread for these private equity tokens. Liquidity is going to be lower, so they're going to be the main liquidity provider, which means a lot more opportunity to charge huge spreads. This is going to open Robinhood to a whole new category of investor demand, and everyday people are going to be able to invest in pre-IPO unicorns. Once they fully roll this out, they're going to have a monopoly over a completely untapped potential market. Right now, you have lots of people that are watching this video as well that would love to invest in private equity companies, but they can't because regulations say no. But Robinhood, once they get through the red tape, well, that could be a very, very big driver for their company. I think it's even more revolutionary than all the other stuff that they've launched over the years. Again, you got to remember with Robinhood, they launched and their whole value add was yeah, we have a simple platform and commission-free trading. That was their whole value add. But what happened in the years after that? Well, the entire industry went that way. But Robinhood already got all the customers from that first wave. So I think that's going to happen again with this private equity tokenization situation and a lot of the other features that they're launching. So I would say Robinhood, again, at these prices, very pricey. I'm not saying go YOLO into this. We've already alerted so many different calls at much lower valuations. We've also had this as a Discord portfolio play. So I'm not saying YOLO in at these prices. It's very, very pricey right now. But at the same time, I'm saying, look, longer term, a lot of upside potential here. And there's a lot that this company can work with. So anyways, folks, that caps off today's video. Have a great rest of your day, and we will see you in the next one.